Hello and welcome to the Weekly Outlook at XM.com. This week, all eyes will be on the U.S. employment report and how it might affect Fed speculation and the dollar. In addition, we'll get interest rate decisions from the Reserve Bank of Australia and the Reserve Bank of New Zealand. I'm Maria Pachurdes, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, there's been a great deal of turbulence in global markets over the past few weeks. Can you tell us how the US dollar has been performing and also what to expect from the employment report coming out on Friday?
Certainly. Hello, Maria. It's been a crazy month for the markets. We had bank failures, financial instability in the United States and Europe, and the main casualty of all of this turbulence has been the US dollar. And that's because the markets, investors are betting that this situation, this episode in banking, is going to force the Fed to start cutting interest rates soon to prevent any spillovers to the real economy. So as we speak, Maria, the markets expect interest rates to end the year at 4.3%. Now, the Fed very recently projected interest rates to end the year above 5%. So that's a big spread between market pricing and Fed projections, and it's going to come down to economic data to tell us which one is ultimately going to be proven right. Now, overall, the economic data pulse has been quite strong lately in the US. Economic growth in the first quarter is on track to exceed 30% according to Fed models. The labor market is exceptionally strong, and inflation, the super core inflation measure the Fed focuses on, that services inflation excluding shelter, that's still running close to 7%. In addition, business surveys have been very encouraging lately. They pointed to a resurgence in economic momentum. They said that demand is recovering, inflationary forces are regaining power. So all of this paints a picture of an economy that is doing better, and it doesn't leave much room for the Fed to start to even consider rate cuts in the coming months. Now, of course, we're going to get the employment report on Friday. It's going to be important as always. Nonfarm payrolls are expected at 240,000 in March. The unemployment rate is expected to remain unchanged at 3.6%. That's very close to multi-decade lows. And the early signals that we've gotten from the labor market support a strong employment report. We saw applications for unemployment benefits remain very low. Business surveys signal that jobs growth reached its fastest pace in 6 months, all of which points to another strong jobs report. And in fact, I think that investors might be surprised on the wage growth front, Maria, because the forecasts expect wage growth to slow, but business surveys highlighted upward pressure on wages. So I see some scope for a positive surprise on the wage front. And if that's the case, that could temper some speculation for rate cuts, and that could help the dollar to recover a little bit. Now, the final note I'll make on this, American markets will remain closed on Friday for the Good Friday holiday, but the employment report will be released normally. Now, what that means is that liquidity is going to be very thin in the markets. The currency market is going to be the only game in town, and that can amplify any moves in the dollar.
Okay, yes. Now, moving into the realm of commodity-linked currencies, the Reserve Bank of Australia will meet on Tuesday ahead of the Reserve Bank of New Zealand on Wednesday. How is each meeting likely to play out, and what's the outlook for those currencies?
Sure. So the markets expect those meetings to play out in very different ways. The Reserve Bank of Australia is expected to remain on hold, while the Reserve Bank of New Zealand is expected to raise interest rates. Now, of course, the economic data pulse has been a little bit stronger in New Zealand. That's why the markets think that the RBNZ is not done with its rate increases for now. So overall, I want to just discuss the outlook for these commodity currencies. I'm a little bit pessimistic on both the New Zealand and the Australian dollars, mostly because the domestic situation looks to be fine in both economies, but those currencies ultimately they trade like proxies for global growth. And that leaves them vulnerable in this kind of environment to sudden shifts in the market mood, because investors are really grappling with a very unstable macro regime right now.
Marios, thanks so much. And thanks for joining us at xm.com for this weekly outlook.